Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the numbers that make the world go round. And today we're diving into BioSig's technologies, and let's just say things are getting a bit more interesting with their authorized shares, like a company trying to get a lot more horsepower ready to go. Before we dive in, if you love getting these insider views on company moves, smash that subscribe button. And hey, we've got a fantastic community over on Discord to break down these filings even further. The link is in the description below, so come join the conversation. Alright, so what we have here is a Form 8K filing from BioSig Technologies Inc. Now, an 8K is a big deal. It's like a company's way of saying something important just happened and they have to tell the public about it fast. Think of it as an urgent bulletin. And the big news dropping on September 5th, 2025 all revolves around their stockholders meeting and some pretty significant approvals that were made. First up, the companies talked about changes related to their long-term incentive plan. Now, what does that mean for you and me? It basically means they got approval to issue more shares of their common stock under this plan. They are increasing it by over 10 million shares, which sounds like a lot, and it takes the total available shares under this plan to almost 15 million. Imagine a pie, and they just made the pie a whole lot bigger, and they're ready to give out more slices to employees or executives as rewards. This is usually tied to performance and keeping their key people motivated. But wait, there's more. They also got approval to amend their certificate of incorporation. This is like changing the company's birth certificate. And the big change here is they're massively increasing the number of shares the company is allowed to have in total. They're going from 200 million authorized shares all the way up to a whopping 500 million authorized shares. That's a 300 million share increase. Think of it this way, they had a big box of company ownership pieces, they just got a much bigger box. This gives them a lot more flexibility to raise money in the future by selling more stock or maybe for acquisitions. It's a pretty substantial increase. Now, all of this got a thumbs up from the shareholders. The report breaks down how everyone voted on a few different proposals. We're talking about things like approving the issuance of shares for convertible debentures, approving that plan amendment we just talked about, and approving the potential issuance of almost 20% of their stock related to a purchase agreement for an acquisition. Let's look at Proposal 2, for example, approving the issuance of shares for convertible debentures. This passed with over 16 million shares voting for it and only about 254,000 voting against. So a pretty clear win there. Proposal 3, which was about their long-term incentive plan, also got a strong majority. Over 15 million shares were in favour compared to about 1 million against. This confirms the company is indeed looking to expand its share pool for its people. Then there's Proposal 4, approving the issuance of more stock under a standby equity purchase agreement. Again, a large majority voted in favour with around 16.2 million votes for it. And this is where it gets really juicy. Proposal 5, which was to increase the authorized shares from 200 to 500 million. This one blew most of the others out of the water in terms of solid support. Almost 20 million shares voted for this crucial change, with a far smaller number, 339,529,529 5 went for the juicy options of and require a much larger number of shares. Finally, Proposal 6 was about classifying the board of directors, meaning staggering the terms of the directors. This is often done to provide more stability and long-term vision. This also passed with about 15.4 million votes supporting it. Interestingly, one proposal, Proposal 1, related to an acquisition and the issuance of a huge chunk of stock for it, was adjourned. It's set to be resumed later in September. This suggests that while the shareholders are approving the general idea of more shares and flexibility, the specifics of this big acquisition are still being finalized or require further shareholder review. Now let's talk about what this all means. BioSig Technologies has essentially gotten the green light to significantly increase the total number of shares they can issue. This is a really big move. Why would a company want so many more shares? Well, it gives them massive flexibility. They can use these shares for a few key things. 1, to fund future growth. If they want to buy another company, they can use stock as payment instead of cash. 2, to raise capital by selling new shares to investors in the stock market. And 3, as we saw, to issue more shares to employees or as part of incentive plans. From a shareholder perspective, increasing authorized shares isn't inherently good or bad. It's like getting a bigger credit limit. It means you can spend more, but whether that's a good move depends on how you spend it. If BioSig uses these shares wisely, perhaps for a truly beneficial acquisition or to fuel strong organic growth, it can be very positive. However, if they issue too many shares too quickly without a clear plan or strong returns, it can dilute the value of existing shares, meaning each share represents a smaller piece of the company. Looking at the strong 4 votes on the authorised shares proposal, it seems the majority of shareholders believe the company has a solid plan for these increased shares. They're betting on management's ability to deploy this new capacity effectively. The fact that the acquisition-related vote is still pending tells us that while confidence is high, not all the pieces are in place yet for that specific major transaction. So what's my take? BioSig is clearly positioning itself for significant future action, likely involving expansion through acquisitions or substantial capital raises. The shareholder approval shows a strong vote of confidence in management's strategic vision, especially regarding the massive increase in authorised shares. The key will be how efficiently and profitably they deploy this newfound capacity. If they can execute on their plans and generate strong returns for every new share issued, these moves could be very beneficial. If not, the increased share count could dilute existing shareholder value without a proportionate increase in company performance. It's a classic case of potential versus execution, and the next few years will be crucial for BioSig to prove they can make this expansion pay off. Alright, that's our breakdown of BioSig Technology's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.